everything in our strategy is about getting to the attainment of sustainable home ownership to the best of our ability, as you said, within the constraints that we operate in.
Welcome to Powerhouse, where we interview the biggest names in housing and ask them about their strategy for growth. I'm Diego Sanchez, president of HousingWire, and my guest today is Allan Merrill, CEO of Beazer Homes. Allan, it's so great to have you on the show.
Diego, thank you. Thank you for having me.
So could you take a few moments to introduce yourself and Beazer Homes to my audience of real estate and mortgage executives?
Sure. I'm Allan Merrill, CEO and chairman of Beazer Homes. We're a New York Stock Exchange listed national builder. We sell and close around 5,000 homes in 16 markets. And the company has a cool history that actually dates back to stonemasonry in the 1600s in England.
Wow. So long history.
A very long history.
So a lot of the big home builders like Beazer have captive mortgage lenders, but Beazer seems to do things a little bit differently. Could you describe Mortgage Choice?
Be happy to. Yeah, it's a fundamental difference in how we approach the business. Our view is we're really proud of the homes that we build, being an energy efficiency leader, but candidly, we're not mortgage lenders. We know that's not our core business. And given the variety of buyers that we have, and frankly, the complexity and the variety of loan programs and overlays and just the complexity on the back end of the mortgage origination side of the business, we realized we would be putting our customers in a much better position if we exposed them to a very curated group of lenders who competed for their business. So we've kind of drawn a line in the sand. We don't take marketing fees. We don't take promotion fees. We don't take slotting fees, nothing. You can't pay to be in our program. The only way to be in our program is to deliver fabulous service for our customers, and you got to win. So we survey our customers multiple times during their home buying experience, and of course at the end, and we look at the winning rate. So our philosophy is let's be great at what we're great at, and let lenders be great at what they're great at. And just another nuance. Every community and frankly every division has its own curated group of lenders. I don't know how often it would be the case that a given lender would have the same interest proclivity to lend in a different geography, to a different buyer profile, different credit characteristics. We're trying to find the lenders in the program for every buyer in every market.
So when you're working on a new development, is this program Mortgage Choice developing a group of lenders that are going to be a good fit for that geography and that home type?
Yes. I mean, let's take a city like Atlanta. So we've got communities all over Atlanta. When we do our next new community, the starting point will be it's likely that the Atlanta lender lineup that we have, 3, 4, or 5 lenders, matches up well. There could be a circumstance, though, where a different lender makes sense. And good example, I was in Orlando earlier this week. There are a couple of credit unions associated with a very famous entertainment company that is active in Orlando, and they're participants in our choice program for those communities that really have a high likelihood of appealing to their employees.
It's a really interesting and customized program. Many home builders that have captive lenders have been buying down rates in this higher for longer rates environment that we've been in for, I think, longer than anyone of us would like. Is that an option? Are rate buy downs an option for Beazer with Mortgage Choice?
Yeah, in fact, I mean, I think it's with almost 60 lenders in our program, I think we have a wider variety of opportunities than those builders who have an in-house lender. And so, of course, short-term buy downs, permanent buy downs, forward rate commitments. The only thing that I kind of drive our team a little crazy with is choice. Anything that we do we always have at least two lenders competing. I never want to put a customer in a position where there's only one solution. So we'll have, for example, I know we're running rate promotion marketing right now in Texas. We have multiple lenders that are competing that have both forward and buy down elements to their program. So we're doing more than one lender in that market because, again, as they're competing, rate's a big part of the buyer's decision, but the service or the program or the overlays that lender is using for qualification purposes might be slightly different. So, we have, I think, the entire toolkit available across all loan programs for our buyers.
Yeah, I mean, rate's important, but really the differentiators are service and speed to close. So it makes a lot of sense that you're offering your home buyers choice.
We think so. And it's interesting. It's funny. I never use the word captive or capture. Our view is participation and winning. I don't want our home buyers to feel like they were obliged to do business with an affiliate who felt entitled to the business. We want them to feel like we have set them up for success, and there are lenders, professional, who are competing to win, to prove that they deserve the business. And that's I think it's been very well received.
Do you track metrics around home buyers that go with a lender in mortgage choice versus a lender that's not in that program?
Yes. So it's funny. Our closing cost contributions, many of our peers will link things that they're willing to do from an incentive standpoint to a requirement that you use their lender. Now, it shouldn't come as a giant shock that may not be the absolute lowest available rate in the market, but it's tied to the incentive. In our case, we tie our closing cost contribution to the receipt of at least two loan estimates. Don't care who you use. If you've got a brother-in-law who's a loan officer at a lender that's not in our program, and that's your best rate, and you've compared that in our compare tool with one of our choice lenders, and you picked, we'll pay. What's interesting is our lenders almost always win because of the competition, that they're not paying origination fees. So it's super efficient channel for them from an origination standpoint. Our lenders almost always win. So the participation rate for us is higher than the capture rates that peers talk about. Our participation rate's extraordinarily high because we've got the right lenders in the right place for our buyers.
And you touched on this a little bit, but what is the best way for a lender to get into or to get their LOs into mortgage choice?
Well, Michael Timpson is the gentleman who runs our mortgage choice program. First thing I would say is don't just send him an email. Find him on LinkedIn, call him. We have a lot of lenders, and there is a modest amount of turnover, but we're not just going to plug you into the program. We need to understand what's your basis for winning. Do you understand what makes Beazer different? Do you understand our energy footprint? Do you understand what we do with choice plans and some of the other things that differentiate our home buyer experience? If you've done that and you're in a market and you can demonstrate that that's your wheelhouse, Mike will try and get you into the program. But I think the thing to realize is staying in the program is actually harder than getting into the program, because if the customer experience scores aren't spectacular and you're not winning with some regularity, this is not the program for you. And I like to joke that I'm not a huge baseball guy, but I think a 300 batting average would be pretty great. I think if a lender in our program is winning 25, 30, 35% of the time, they should feel spectacular. They're not going to win more than that because we have other great lenders who are competing for that business.
So Beazer is a national home builder, but I would imagine you have some geographic pockets of strength across the country. What are those geographic focuses for your company?
Well, we're largely a Sunbelt builder. I mean, you would see us across the Southeast, the Southwest, California, and up the East Coast into Maryland and Virginia. We've got really strong businesses in Tennessee and in Indiana as well. So a couple of, I never really know what to call Nashville. Is it Southeast? Is it Mid-Atlantic? Is it
It's a cool
Midwest?
city. That's what I call it. It's a cool city.
Yeah, it's a cool city. But in terms of pockets of strength, I mean, we've been super intentional about not just trying to plant flags in new markets because it looks good on a graphic. We are in places where we've got legacy, we've got experience, we've got an experienced management team. And I always say that the next dollar we invest is a lot less risky in our existing footprint than the first dollar we would potentially put someplace else. So we've been intentional about our markets and even more so about our submarkets. We're not trying to be the builder for everybody in the markets that we're in. Lots of growth for us in the footprint that we have, and that's really where our focus is.
Mortgage Choice is a pretty significant differentiator and a really interesting program, and kudos to the team that built it there. Are there other differentiating points that Beazer has versus the other national home builders?
Yeah, there are a couple. Probably the one that we may be even better known for than Mortgage Choice is our energy efficiency differentiation. You know, we refer to it as surprising performance because I think a lot of people, they don't come in wondering about ACH and HERS scores and those kinds of things, but as they learn about the choices we've made, the home that we're building, they're almost always surprised. And then we can demonstrate it in terms of verifiable performance information. But we are the country's energy efficiency leader in new construction. We're the only national builder that's committed to the Zero Energy Ready program, which is just a way of keeping score. Our homes perform incredibly differently. I don't know how interested your listeners would be. I could geek out on building science a little bit, but that is one of the things that we are orders of magnitude different from what others are doing. We also have a program within our company that we call Choice Plans, where we have configured all of our plans to allow a customer to make structural options at no additional cost. We'll have choice kitchens and choice primary baths in every home. A simple example is, you know, I don't know about at your home if the sink in your kitchen is in a center island, or maybe it's on a wall under a window where you can see into a backyard or something. All of our kitchens are going to have both options and at no additional cost. So what's the lifestyle you want to have? We wouldn't be great at doing non-standard options or semi-customization, but what we are pretty great at is figuring out what are the preferences of buyers. Let's template both of those into the home. Let's figure out how to make that an indistinguishable cost so that the buyer has the privilege of picking whichever best meets their choice at no cost. So that's another significant point of differentiation for us.
So a major part of the audience for this program, mortgage lenders, we talked about Mortgage Choice, also real estate brokerage leaders tune in. And real estate agents have had tricky relationships with home builders over the years, especially if a new community is in a seller's market. How does Beazer partner with real estate agents?
Well, I'm happy to say, maybe one of your listeners would disagree. I don't know that I would describe our relationships as tricky. We've been very consistent. We have cooperated with realtors in all of our communities my entire tenure. I think like a lot of builders, one area that can be complicated is if a buyer tries to add a real estate professional to a transaction weeks, months after we have reported a sale. Like that tends to be problematic. We are disciplined about the fact that we need the realtor to be present at the time that we're meeting the buyer, and we will always protect that realtor. But other than that, which those issues can arise, I would say our relations have been good. If I may, I would say if I could ask the realtor community for one thing, it would be to spend as much time differentiating new homes as they do differentiating used homes. Now, I bought used homes in my life. I'm sure you have. And one of the things I valued from my realtor was explaining whether by school district or amenity or recent modifications or improvements, the differential between two different homes. they both may look similarly great from the street, but hey, this one's got new windows. This one, they redid the HVAC equipment. Knowing those kinds of things is a really core part of a realtor adding value for a buyer in a transaction. And frankly, if the realtors really dig in, they'll see there are huge differences in new homes. I think they tend to think of new homes often as being easy substitutes for one another. Well, we're respectfully, from a building science perspective, there is nothing similar in our home to the homes that any of our competitors build. Not the 2x4s, because we use 2x6s, not the insulation, not the HVAC equipment, not the fact that our homes are achieving air efficiency standards that are I get it. It's a little nerdy.
Yeah.
But our homes are different. So if I have a request, and it's not a frustration, but I think an opportunity, frankly, for realtors to differentiate themselves with their buyers, doing a little bit of homework and knowing good, better, and best and who's building the best homes, I think would be a huge benefit.
I don't think it's nerdy at all. And if you think about it, it's a $500,000 to $2 million purchase decision. Let's nerd out. Let's make sure it's a good house.
These choices make a difference.
Yeah.
We can, and we show this in every home. Your home's going to have an energy cost of $30, $40 a month. A comparable home, code built's $200.
Right.
And what would you do with $150 every month? And by the way, do you think utility costs go up or down over time?
Right.
If they're going up over time, that wedge, that gap gets bigger. We're talking about things that add up to tens of thousands of dollars. Boy, the realtors that I've worked with in resale transactions would make a big deal out of distinctions that frankly had a much smaller impact on the buyer experience. So I'm not referring to this as tricky, but I would say I think for realtors, the opportunity to differentiate with buyers is to realize that all the builders aren't the same.
Yeah, that's really interesting. So in Beazer's Q2 earnings release, you talked about weak demand and valuation dynamics, leading you to shift focus at the company in terms of the financial strategy to share repurchase. Could you tell me a little bit more about what that means? Does that mean that Beazer will be cautious about growth over the rest of this year and into 2026?
Sure. So what we said is we're going to grow a little bit more slowly so that we can allocate some capital to buying our own shares back. But we said we're going to stay in a growth footprint. We are absolutely confident in the markets that we're in, are undersupplied for housing now and well into the future. But share prices in the sector are down between 50 and 70% over the last year. We and other builders have the opportunity when we buy our stock to buy the assets we already own at a discount. Like, it just is a fiduciary responsibility. Our shareholders expect us to allocate capital in ways that we earn good risk-adjusted returns. There's very little risk buying a thing we already own. We already own the risk. I can buy it again at half price. That's a thing we should probably do. But investors also want growth. It's and, not or. So all we said is we had set a target that we'd have 200 actively selling communities by the end of our fiscal year 2026, which is next September. We said we're going to push that out to fiscal year 27. We'll still have more communities next year than we have this year, and more in 27 than in 26. But the attainment of that 200 number, we pushed out a year so that we could free up some capital to, in this environment, buy back some stock.
When we look at our proprietary data at HousingWire, we also see weak demand on the existing home sale side and for new home sales. If you had a magic wand and you could wave it and increase demand, what would you change about government policy or the economy to boost demand? That's
an interesting question. Can I reframe the question just a little bit?
Yeah, sure.
Because when you said government policy, there is something that I think is obvious, and when I describe it, I'm guessing you'll agree with me, but it's almost never talked about. And I think one of the core contributors to the housing affordability crisis in this country. And it's a choice that is a set of policies that we've made that I don't think we've necessarily fully realized. And let me describe what I'm talking about. Probably the easiest way to leg into this is if you and I were having a conversation about the federal budget, I know that we run a deficit. And it's kind of astonishing the level of deficits that we're running during the non-recessionary period. But we have a long history. Most of my lifetime, the U.S. government has run a fiscal deficit. To me, a way of thinking about that is we want things now that we're going to let somebody pay for in the future.
Mm-hmm.
Right? And does that make sense?
Yeah, totally.
So take that idea and overlay it on the infrastructure for the communities that we all live in. Have we invested in the maintenance of our electric utilities, of our gas, our water, our schools, our roads, our bridges? And the simple answer is we haven't. So what we do instead is we put impact fees on new construction to get the next buyer to foot the bill for the deferred maintenance that we weren't willing to pay along the way. It is a huge, huge part of why housing is so unattainable. I mean, in Sacramento, just as an example, our permit fees get to nearly $100,000 per home before we buy land, pay for labor, or pay for materials. And it's a place that is desperate for affordable, attainable housing, but it's $100,000. Now, why is it $100,000? Because they've been operating on a kind of a pay-as-you-go method. They haven't invested in the infrastructure. They don't want to tell gas utility or electric utility or sewer utility customers that they need to pay more to maintain the physical plant. They're going to get Mikey to pay it, the old Life cereal. Mikey will do it. Well, who's Mikey? Mikey's the next home buyer. So we've shifted to this next generation of home buyers, the infrastructure investments that we haven't been willing to make, and then we complain about why housing's so expensive. So back in the magic wand category, you're framing, if I had a magic wand, it would be a realization so that we stop being mad at the wrong people about why housing costs what it costs, and we really understand the consequences of the choices that we've made.
Really interesting response. And so we don't have the magic wand, but I would imagine, and it seems like you are interested in the topic of affordable home supply. Within the current constraints, what is Beazer doing about affordable home supply?
So, literally all three of our biggest differentiators are about attainment and affordability. Mortgage choice. When we get banks competing on programs, down payments, MI, interest rates, like that directly affects the attainment and the affordability of a home. We study this a lot. We look at rates and we see from our buyers where they've got proposals from other builders, lenders. Well, we can get a quarter, 3/8, a half a point inside. The present value of that spread is $10,000, $15,000. That's affordability. When we get utility bills $100 or $200 lower every month, that's affordability. When we have customers making structural changes to their floor plans at no additional cost, but it lives the way they want, that's affordability. So everything in our strategy is about getting to the attainment of sustainable home ownership to the best of our ability, as you said, within the constraints that we operate in.
Well, Allan, this has been a fascinating conversation. Really enjoyed talking about home building with you and the ways that Beazer differentiates from your competitors. Thank you so much for joining me today.
Thank you very much for having me, and great questions. I appreciated it.